Hello and welcome to another Impact Insights. I am honoured to have today with me Charles McDowell, who is Managing Director of Specialist Mortgages at Hampshire Trust Bank. Hi, Charles.
Hello, Dale. How are you keeping?
Very good. How's things at HTB?
Yeah, things are going well. You know, we were just getting back to normality, into this new norm, and then obviously this is being recorded just as we're about to enter sort of lockdown 2.0. But you know, we're just kind of dealing with things and just cracking on with things. Really, that's how we approach it.
So for those, I mean, everyone should know, but just for those who don't know Hampshire Trust Bank, what do you specialise in? What's your sort of main areas of the market that you cover?
Yeah, so we are the specialist bank, and I guess the bank thing is a very important bit there. You know, it means that we have good access to funding and liquidity, and indeed that was demonstrated through the first lockdown, where you know we had deals completing and offers being issued each and every day, right the way through the last lockdown, which is really important to us. In terms of the specialism, you know, we have a number of lending lines across the bank. I obviously look after the specialist mortgage ones, but we also have a development finance arm that is, you know, supporting medium and small house builders. And we've got an asset finance arm that supports small and medium enterprises that buy sort of kit and machinery. But in terms of the specialist mortgage piece, really it's about retail and residential and investment property, so buy-to-lets typically. We also look at semi-commercial and do a bit of bridging as well, but really buy-to-lets and residential investment is our key focus. And the specialist bit really is about offering bespoke solutions to our brokers for their professional investors. You know, we offer a wide range of products, right up to sort of a 15 million exposure across, you know, we've got no maximum limits in terms of portfolio landlords or types of properties as well. So it really is that back to basics banking. It really is about getting the you know, we're blessed with a really strong team who understand credit, who understand property, understand financial crime risk as well, which is becoming more and more important across the industry. And actually, it's just about empowering them to, you know, assess cases and make lending decisions based on their experience and their knowledge and expertise.
No, fair enough. And the word specialist is being used a lot just recently. Is it being overused? And obviously, you're MD of specialist mortgages as such, whereas I think some of the sort of the main high street guys are trying to coin into the specialist side as well. And is it being overused? Does it cover all buy-to-lets, or does it very much into the bespoke model that you guys tend to have?
Yes, so that's a real really good question. You know, ultimately, there's a spectrum of complexity, and on this spectrum of complexity, you have a very, you know, a vanilla borrower who's maybe he's a even if he's a portfolio landlord, but maybe he's got external income. So he's an IT consultant on the side, but he's got a small portfolio, mid-terraced residential houses let on ASTs, and they're very, very vanilla, you know, very much the cookie cutter approach, which is another term which is a little bit overused, admittedly, within the lending space. And then you get more and more complex, and the cookie cutters become ultimately more and more complex, and they turn from little circles into little stars and little gingerbread men, but ultimately they're still cookie cutter approaches. What we try to do is almost be right at the other end, where it is very, very flexible and very fluid, almost to the point where we are almost productless, where we will there's very few things that we say no to, and it is a black line. You know, we obviously have an appetite, but we almost have a set of scales we put all the positives on one side and all the negatives on the other, and we try to balance it up. So there's very little stuff that we will say outright no to, and if there's enough, even the stuff that we don't like, if there's enough positive mitigations on the other side, it is something that we can potentially look to do.
Which is brilliant, especially in the current climates, because there's a lot of stuff that's coming out of the woodwork that even we have had raised eyebrows at in the current climates that we didn't maybe know that was there before, and it's great to have a lender like yourselves who will consider those sort of scenarios. But obviously, you know, you mentioned it, we're going into lockdown tomorrow. Availability of funding is good with you guys. Is it going to be the same across the market? And also, valuers can still value properties at the moment, but what happens if the lockdown becomes more stringent, or maybe clients don't want to let people into properties?
Yeah, it's going to be an interesting few weeks and a month ahead. I think that there's so much momentum in the overall property market that this second lockdown will not have too much of an impact overall. The government and indeed the regulators, both the FCA and the PRA, have made it very clear that they do not want the housing market to stop through this lockdown. And as I say, the momentum's there, the chains are already in place, as a lot of the processes have already kicked off. Yes, it will slow things down, I've no doubt. When we're talking to our valuation partners, they're very much going on as normal and will continue as normal into the market. However, they do recognize that if they're going to see a property, even if the tenants or the people living in are shielding or don't want someone to come in, it's clearly going to potentially knock that back. I don't think it's going to be nearly as bad as it was during the first lockdown, but I think there is the potential to slow things down. I guess the interesting thing is through the first lockdown as well, we all came up with a number of sort of ways to get over the hurdle. So we have now implemented, we do permit desktop valuations for a very small, for a select sort of situation. And even when we've been doing lending on properties where it's maybe a block of flats and we've managed to get into sort of 9 out of 10 of the flats, and the last one the person is shielding inside of it. So actually we've done a FaceTime walk around the flat just to sort of make sure that we understand the condition it's in. Okay. So all of these things will be readily available to lenders to allow them to get around any roadblocks that are put in place. But overall, I do just think that this is just another thing that as an industry we'll have to deal with. I guess my concern is that we are dealing with almost unprecedented volumes. Every lender is saying that they are seeing record volumes coming through, which is great. It's fantastic. I think there has been a huge pent-up demand, which is now being released. So service levels are being stretched, and that is across, brokers, lenders, solicitors, valuers. And this is just another thing to put on top of that. And particularly when everyone's focusing in on that end of March deadline for the stamp duty, is going to be an interesting sort of 4 or 5 months ahead.
Yeah, I think we'll come back onto that in a second. But over the last few months, what has sort of surprised you the most about how we've been resilient and changed the way we work, the way brokers work, the way lenders have worked? What's surprised you? What's pleased you? What's worked? What hasn't worked?
Well, I guess what's really pleased me is just how resilient the market is. The market is, and I don't know why I'm surprised, because actually, I haven't been around the mortgage market that long, but every couple of years there's a new regulation come out, or a new something that's come out from either the government or the taxman or the regulators, and every year it's like, oh, this is the death knell for the private rental sector. Oh, buy-to-let's dead, all this sort of stuff. And every year, actually, the sector, we get through it. Not only do we as a sector in terms of lenders and advisors get through it, but actually our underlying clients and consumers, the buy-to-let landlord, you should never underestimate how resilient property investors are, and indeed how resilient the asset class of residential property is. So no matter what gets thrown at it, it always seems to be able to go through it and survive. So that's been really pleasing. And I think in terms of how as an industry we all really grasped technology very, very quickly. It was in this space of if I think back to the middle of March, we were having meetings within Hampshire Trust, and we were talking on the Monday. We were talking about, the possibility of having some people working from home. Then by Wednesday, we had divided people up into an A team and a B team, where the A's would come in 1 week and the B's would come in the following week. Yeah. And then by the Friday, it was like, actually, everyone needs to go from working from home. And actually, from the next Monday, that pretty much happened without a glitch. And that was echoed right across a number of our introducers and a number of our competitors as well. So as an industry, I think we've grabbed onto the technology really well. And actually, I'm very proud of both how HTB have done it and how the industry as a whole has.
Sure. I mean, the working from home became the norm. The Zoom calls became the norm. We're doing this with clients and ID checking and interviewing and doing fact finds. It is the way forward, and it is going to be for quite some time. But also over the last couple of years, as you mentioned, technology. there's a lot of stuff that's been promised to us that maybe not has come to the forefront, and maybe now the COVID side has actually put some lenders, 6 months, 12 months, a couple of years behind maybe where they used to be on the technology side. Yeah. What's your views on whether technology is actually meeting where the promises that some people have made?
Yeah, no. Look, it's clearly going to be a challenge. COVID has set people back across the industry, and particularly lenders. I'm very proud that actually over the last 6 months we have continued to develop our change agenda. We had a very ambitious change agenda, but over the last 6 months we've introduced electronic ID verification, which actually landed in, I think it was April time, which is really, really lucky, because actually it helps the whole thing. Like if perfect I imagine, perfect timing, we used to always be, photocopying passports and certifying them, all that sort of stuff. But actually now 95% of our cases go through electronically identified, which is great. And also we've been putting in place a number over the last couple of months, a number of technology projects has been put in place where we've got like robotic processing automation going on in the background, which connects a lot of our systems up. Again, it frees up our sort of colleagues from doing sort of manual, mundane, repetitive tasks, and allows them in turn to turn around to sort of serving you guys and your clients. Yeah. And we continue to have some quite exciting change things which will be delivered over the next couple of months. So I'm quite excited by that. But look, there's no doubt that COVID has been a significant burden on lenders. If I think back to April and May time, we pivoted a significant portion of our team onto supporting our back book. We supported almost a quarter of our back book through the payment holidays and the support that they needed, and which is all actually landed really well. And the feedback that we were getting from your clients and our borrowers was really, really pleasing, that we managed to sort of support them through that difficult time. And now it's about, okay, we've got these people and we pivot them back to new business to support what's going through the front end pipeline at the moment.
Yeah, sure. And absolutely. It was great that you were helpful throughout the pandemic, and you've been helpful more recently. And of course, we just had an email come through where we can click a button and book a Zoom call with your guys as well. So the technology is working without a doubt. It's great. But obviously, we talked about this briefly earlier, stamp duty coming to an end towards the end of March. Will it be extended at all, or are we absolutely working to this deadline, and is there nothing that can be done about it?
Well, I think, we need to be working to the deadline, and 100% we need to be focused on achieving that deadline for everyone involved. And even when I look at our business, the majority of our business is refinances. So you might think, okay, well, we're not necessarily involved in that, but no, almost all of our refinances are to release capital, to raise capital for further onward investment and purchases. Yeah. So we are very aware that we are still part of that chain, and we are very much focused on delivering that. So I think the industry as a whole needs to focus on that. But if you ask me, and I have absolutely no insight into anything, I'm almost certain it will be extended. I don't know where that confidence comes from, but I just think that with everything going on in the overall economy, with everything, all the challenges that will be hitting the country as a whole, I think that it is an easy thing for the government to. It is an easy sort of boost for the government, for the overall economy, to keep that stamp duty holiday in place.
I agree. I think that their hands will be tied, especially as, yes, we're going into a month, but my personal view is it will be extended from a month, and if that then brings valuers off the roads and solicitors out of their offices and so on, then obviously there's going to be more delays down the line. Obviously we've got a lot of concerns, but what are the big issues on the horizon for brokers at the moment? What should they be really concerned about over the next sort of 12 months and further in advance of that?
No, look, that's a real challenging question. When I think certainly what's concerning me, and we mentioned, I mentioned about everyone embracing technology, and I'm really pleased with what we've done. But I do think there is a real, the working from home thing, although it's gone without too many wrinkles, I do think there are some real downsides. I think the biggest one actually is energy levels. I do think that energy levels will start to dissipate across the whole industry. the first lockdown happened, I think we almost had this sort of trench mentality, the blitz spirit mentality of, okay, we'll get through this and we're all in this together.
Yeah.
I do feel not just within the industry, but actually society as a whole is becoming more burdened by this, and a number of people are struggling with it. So I do think energy levels as a whole are starting to dissipate, and we need to really challenge ourselves to keep the energy levels up. And then the other one as well is kind of spotting. My other big sort of challenge in this area is spotting talent. When I was in the office and we had our whole team within one open plan office, it was very easy to spot who are the shining stars and the rising stars, and we can put our arms around them, we can push them forward, we can push them on, and they can grow and continue to flourish. I find it really challenging to do that. Almost if I think when we were back in the office, I would talk to almost everyone on a daily basis, just as I was walking past them, etc. But now I can go weeks without talking to some people in my team. Now the onus on me is to make sure that I rectify that, but it just becomes difficult to do. And so it's a bit harder to spot those shining stars and those rising stars, and a bit harder to I think nurture talent. Equally, I think on the flip side, it's harder to identify those people that maybe aren't performing and aren't doing as good a job, and who need that extra support. So I think that is going to be the real challenge, is making sure that we continue to be a high performing industry as a whole, with high caliber people right the way through it.
Yeah, that's some really good points. My other thought on that is that brokers who are used to dealing with the high street, so your straightforward residential, straightforward buy-to-lets and so on, that think that technology is not going to take some of those clients away from them, I think is sorely mistaken come 12 months, 24 months and so on. And more so now than ever, they need to be getting into the specialist side, looking for clients who may be burying their heads at the moment because they don't think they can get a mortgage. Got a complex entity, they don't think they can get a mortgage, which also brings me on to the other point. Are we educating consumers enough? Are we reaching all the way down the line to get to the end consumer to actually give them the opportunities to deal with someone like yourselves?
Yeah, I think you're absolutely right there. It is, sometimes the biggest challenge is getting investors to even go and speak to an advisor in the first place, because they often end up deselecting themselves. And I actually think that maybe less so in the bit more of the professional bespoke space that we operate in. But one of the worst things that I think has actually happened to the mortgage industry is all of these sort of aggregator sites and things that allow consumers to almost look at something and they almost end up deselecting themselves and going through their own criteria and saying, actually, that's just not for me. And the number of people, and I'm just thinking, this is not something we do because we don't do regulated mortgages, but the number of first-time buyers out there who read the Daily Mail headline and go, oh, well, I can't even attempt to get on the market. Well, actually, go speak to an advisor. You'll be surprised at what's out there and what's available for you. So you're absolutely right. There is, I think, as an industry, we need to continue banging the drum. And it's everyone who is out in the industry talking in the press and talking to the consumers is doing the industry as a whole good as the tide rises and all boats get lifted up. Yeah.
Are you seeing an increase in weird and wonderful properties that are coming to HTB?
Yes. Yes, there are absolutely. We always go back on, and one of the reasons why we've performed so well through COVID actually is that these are residential properties. All of our book is secured on, even though we do some semi-commercial, they need to be predominantly residential. So all of our book is secured on properties where people are inside and putting their heads to a pillow every night, and I think that's really important. And yes, we see quirky properties coming out, but ultimately, when you break it down, you've got a property that and a home for someone to live in. You've got a rental demand that drives the rental income, and from that you can work out the ICR. So yes, we are seeing some quirky properties, but nothing that can't be boiled down to just simple residential investment and demand and supply ultimately. The one thing I'm very conscious of is just making sure that, the vast majority of our book is interest only. I'm completely happy with it being interest only. I think that is a really worthwhile product, and it's the right thing to do. But it does mean that we are always conscious that when we look, on a 5-year fix, when we look 5 years into the future, what is the property going to hold up its value? Is the customer, is the borrower going to be able to refinance either with us or with another lender? So we always try to put that cap on when we're assessing a deal to understand.
Always got an exit route.
What are the maintenance costs and the service costs associated with that property?
Sure, and also with that brings us nicely onto the new product you just come out with, the refurb in term products.
Yes,
you just come out. Will you tell us a little bit about that?
Yes. So look, this is a fairly straightforward product, and actually it came from. We obviously do a small amount of bridging, and a lot of our bridging products are refurb products. And they would come in because someone was buying a property and they obviously want to do it up and do a light refurb of it. Nothing structural or anything like that, but just refurb and rekit the property. And then they come to us and say, well, I'm looking for a refurb bridge. So we say, okay, well, this is our product for that. And then they're saying, and actually I'm wanting to term it out. And we go, okay, well, fine. Well, we can do a refurb product. And then when you've done that, we can do a term product. Yeah. And then they say, actually, you know what? The refurb, I've got my contractors in. The rental demand for this property is very high. The contractors are coming in. I'm going to be done in about 3 or 4 weeks. And actually, we can just go, well, we can just put you straight onto the term. Given the fact that this is a standard property, we've got clear line of sight over the works that you're going to be doing. And we've got clear line of sight that this is a 0 to 3 month rental period. Yeah. We can see that you've got, 10, 20 grand in the bank account, so you can service the loan through that 3 month period. Let's just put you on a term loan and let's not faff around with all that different products and different stuff. So that's really where the thinking comes for this product. It really is driven by actually what we were doing. We were doing this anyway. People were coming for a refurb, and actually we were saying, look, we can just put you straight on a term.
Yeah, and you got no minimum income and no maximum age on that either.
Correct, exactly.
Which is really, really attractive. So I'm just running out of time. Have you come across problems with or properties with cladding and EW1S forms?
Yes, so
certifications and authorizations and all that sort of stuff.
Yeah, absolutely.
Headlines.
So at the moment, we require our properties to have the appropriate forms and the appropriate fire safety in place and appropriate cladding sign off. So that is something that we work very closely with our valuation partners on. We've got a couple of deals which we've seen go through where we've had the appropriate certificates in place, which is a good thing. It's something we're starting to see more and more. So far, there hasn't been any issues in terms of not being able to get the appropriate certificates in place. But this probably will end up being a fairly solid line for us. If that certificate isn't in place, or if we can't get comfortable that it won't be in place, then this may be a security that we wouldn't want to lend on. I think it's very important that these types of certificates and tests are done for our
absolutely
security.
It's more towards the lack of people who can actually sign these off. That's what we're tending to see at the moment.
Yeah, absolutely.
Cool. And then just really, what's your 2 bits of advice to brokers out there at the moment who, with everything that's going on, what's your two great bits of advice for them?
I guess, look, ultimately, just keep talking to your BDMs, and I would say just go to one of the specialist lenders and make sure that everyone's time is so precious. So make sure that you speak to a BDM which is going to give you something different. And it doesn't have to be an HTB BDM. It can be there are many great specialist lenders out there, but just make sure that you're up to speed with everything that can be offered. And then the second one is just stay really close to your clients. We as lenders who are intermediary lenders rely on the broker market so much for our intel. We don't have direct access into what the demands are in the market. So stay close to your clients so that you can then feed that back up to us, and hopefully we can start innovating and providing solutions for you and your clients.
Brilliant bit of advice to end on there. So Charles, thank you so much for your time. I really appreciate it.
That's been brilliant.
Thank you for watching. Obviously, in these very interesting times, please take care of yourselves, keep safe. We're on the end of the phone. If you need help with anything on the specialist side or complex, give Impact a ring. We can deal with people like HTB, and we'll help you as much as we can. So keep an eye out for these, more of these Impact Insights coming soon. In the meantime, thank you for watching and stay safe.